Good morning and welcome to Market Opening on our collab show between Business Today and India Today TV. Just after 9, we're here to get you ahead of the curve as markets kick off trading for the day. Let's take a look at what's hot in the corporate and financial space. Gold shoots to a shocking new high, just shy of $4,400 an ounce in the futures market on COMEX. It's set for the biggest weekly gain in 17 years. Silver also lodged at new highs, latest spurred due to renewed fears of a trade war between US and China. Indian Sarafa Bazaar to reflect the movements ahead of Diwali week. Indian IT majors downplay the impact of H-1B visa rule changes in the US. Infosys, Wipro, TCS, HCL Tech and Tech Mahindra all say the new visa charge will have limited or negligible impact as most of their US staff are local hires. The US Chamber of Commerce has meanwhile sued the Trump administration over the hiked fees. Indian stock markets expected to open in the red after Asian and US stocks fall overnight due to global trade tensions. Bad loans at two US banks, Xeon's Bancorp and Western Alliance, heighten concerns about the credit market and lead to a fall in financials. Are we finally seeing green shoots for IT? Infosys and Wipro raise revenue guidance, cite improved deal flows. Investors, meanwhile, waiting for Reliance Industries, key influencers for markets next week. Commerce Minister Piyush Goyal delivers a sharp rebuke to Indian industry at a CII event, says it demonstrates so much weakness by making a fuss over even a 1 to 3% quota for imported goods. Calling such reactions ridiculous, he urged the sector to back India's free trade negotiations instead of resisting competition. Well, first up, let's take a look at those gold prices. Breaking news coming in for you on your screen. MCX gold hitting a record high. Remember, it's Dhanteras also tomorrow. We are celebrating that festival and everyone will be out there looking to shop. Gold opening at 1,31,429 on the MCX. Remember, it's just been about 10-12 days, as my producer tells me, gold shooting up almost $300-400. So that gives you a sense of the kind of rise that we're seeing on the heavy metal futures. Now trading above 1,31,600 and opening as you just saw. Silver is also at a record peak and we'll bring that up for you as well, trading above 1.68 lakhs per kilo. So those are the kind of prices that we're seeing on the precious metals this morning, rising to record highs in the global markets. Some fears about credit quality in the US economy and heightened trade tensions between US and China, strengthening demand for safe haven investments. That's why we're seeing this consistent rise across gold. And $4,300, that's the first time ever that we're seeing that kind of level on gold. So that puts it on track for its biggest weekly gain since back in 2008, extending a breakneck rally that began in August. Meanwhile, silver has smashed through an all-time high that was set in 1980. That's what we saw this week on silver. Prices rose to a fresh peak of $54.38 an ounce. That's a massive spike, also visible in prices of palladium, platinum, so across the board on metals. Ajay Kedia joining us now. Ajay, good morning. We're tracking this phenomenal rise in the precious metals, breaking all kinds of records historically. Tell us what you're making of the new all-time high, trading above that $4,300, set for $4,400 on gold.
Very good morning, Abha. And first of all, happy Diwali to you.
Happy Diwali, Ajay.
So I think this is a very auspicious day, and we have already seen as gold prices has tapped 1,30,000 on domestic market, has already crossed, and silver has doubled from last Diwali. And as we know, dollar index is slightly trading weakness, uncertainty between US and China, trade tension, shutdown, interest rate cut down. Everything is been, as of now, is supporting bullion. However, we were not at all expecting this type of bull run. Mostly we see gold silver gives a return of around 20-25%. This is a time where since last couple of years, every aspect like geopolitical tension, interest rates, recession fear, everything came at a one point, and that is why this rally has been continued. As a consumption side, yes, still we expect the consumption or auspicious buying will continue to be there. But for an investment part, I think slight risk on is been there as of now. But unless and until geopolitical concern doesn't comes down or interest rate scenario doesn't come down, I think the rally can continue we can see the level like 4,500 on international. Silver might go to the level of 72 also, as global shortage is consistently supporting this price. So still, market is going on a higher side, but with a slight cautious tone, we should be there.
Okay, we're also expecting that short squeeze in silver to ease out post Diwali. But in terms of these record prices, Ajay, do you feel that investors should be a bit wary at these levels? Do you feel it's always a good safe haven bet? How do you anticipate demand pre and post Diwali? We've just got a few days left now.
Abha, I think as an investor or a consumer, definitely silver looks more attractive. We used to say silver is poor's man gold, and who has left the feeling left out in gold's rally are now constituting with silver. Silver is having a two demand. One is physical side investment demand, and also industrial demand has been continuously rising in last 3-4 years with the EV or clean energy. So one side supply deficit is there, other side the industrial demand has emerged. That is why the squeeze has been created, and now prices has rallied seen the last level of 1980 or 2011 where we have seen $50. So I think unless and until this squeeze doesn't clear out, I think prices might immediate can test around $58 to $60 also, but overall think maybe around $75. But as an investor, this is not a right time to get in, because already prices has doubled in last 1 year period.
All right, great advice, Ajay. Thanks so much for joining us, and we'll continue to track that heady rise on the precious metals. That's the breaking news for you this morning. Let me also now welcome in Shailendra Bhatnagar, our Chief Analyst and Editor of Markets. Shail, it is Friday. We've had a pretty decent week. Just a few days left now. Tomorrow, Dhanteras, and then Diwali on Tuesday and Mahurat on Tuesday. What's the setup looking like this morning? And is it going to be all about earnings or all about trade tensions?
Good morning, Abha, and as you very rightly said, it's Friday. Thank God for it. A wonderful rally on the Nifty, 1,000 points is what we've added over the last in the last 11 sessions in October. Now, what is really interesting is that Reliance has started to kick in at a time when we are headed towards an all-time high. So Reliance has about 8% weightage in the market. Yesterday, it rose from its 200-day moving average, and many other stocks are showing signs of very strong breakouts. So this rally will continue, and most likely we'll see a dip today because ahead of Friday, people don't want to take extended positions, and it's a holiday as well. So that's the broader structure. Bank Nifty is in a kissing distance of an all-time high. So that's there. Reliance is moving, and FMCG stocks have started to show signs of gains, and that's the reason why I'm a little cautious at these levels. FMCG is a defensive sector, and money moving that side shows that profit booking is happening, and people are taking conservative positions in stocks that have been beaten down. So IT, remember, I told you last week, this is going to be a very nice long trade, and this is what is happening. Nippon India ITB's ETF is the thing to buy on Dhanteras rather than gold and silver, Abha.
All right, Shail, thanks for that. And yes, you did mention it. Let me bring Mayuresh in as well. Mayuresh, good morning. Good to have you with us. Let me first get your strategy as well. You heard, of course, what Shail's saying about the setup. We're just counting down to the opening bell. How are you viewing the markets this morning?
No, constructive, Abha. Morning to you as well. And therefore, I think results have been encouraging so far, whether it be banks, IT companies, which were supposed to be laggards in this market. And therefore, I think the start to the earnings season has been good. But I think the real expectation is that Q3, Q4 will be even better. So yeah, remain constructive.
All right. In fact, we will bring you all the latest on earnings. We've got a whole host of stocks that will be in focus. We've got the IT majors, Infosys and Wipro, which are actually down overnight on the global index. 1.5% is what we're looking at in pre-open. CIE Auto was up in the sense Q2 profit was up about 10%. So from the broader markets, we've got a CIE. I'll pull up a few others for you, even though we're just waiting for opening bell. So perhaps I'll do it right after that. We've got Z that's reported earnings. Terrible earnings actually coming in on Z Entertainment. Okay, there's the opening bell. Nifty 50 down just a touch. We were expecting it to be pretty quiet this morning. No major action. Focus continues to be on earnings right now. Nifty Bank is seeing a touch of a dip this morning right now. IT is the one that's down over 1%. We'll talk about those IT earnings, lots to talk about there. And now, of course, we've seen pretty much all of the 5 majors report their set of numbers as well as outlook and guidance. We've also heard from them on the impact of AI, on hiring and the visa, etc. and so on. Okay, on the gainers list, Reliance ahead of earnings, 0.5% up, steady. Geofin is also 0.5% up. Asian Paints is looking good this morning, so that one's actually trending higher. Just trying to track if there's any trigger point coming in there. Aisha is back in the green, so some amount of action picking up there. Of course, we've seen auto on a roll, but IT, that's where the heavy selling is coming in. HCL Tech, probably some profit booking. Wipro is down almost 4%. Infosys down a little over 1%. Adani, Trend, some of the others on the downside as well. Let's pull up some of the other earnings related counters. Let's pull up Cyient. Q2 profit was down almost 30%. That's from the broader markets, of course. We've got Z that reported earnings. We've got Geo Financials. Profits kind of steady, but revenue was up about 41%. That's Cyient on earnings reaction. That's Z down 3%. Not a good set of numbers coming in there. Let's pull up Geofin, of course, is already trending higher. We've got Kajaria Ceramics, net income up 58%. Let's see which one we pull up next. There you go. Geofin steady post earnings. We've got Kajaria moving. LT Mindtree also Q2 net income up about 12%. That's a beat on estimates. So let's pull up LTI Mindtree and see how that one's reacting. Should see a reaction there, up about 1% or so. Punjab and Sindh Bank, net income up 23%. Let's pull that one up as well and just see if we're seeing a reaction coming in there. Just running through some of these earnings for you. And then, of course, we'll talk about IT in a little bit more detail. There you have it. Punjab and Sindh up about 2% or so. Mayuresh, got to come to you on the IT majors. Wipro and Infosys first specifically, of course, because they reported yesterday. And it may seem like Wipro is perhaps the slowest mover of the lot, but its outlook wasn't all that weak. What are you making of the reaction from the markets and the overall setup within the IT pack now that all 5 majors have reported earnings?
No, I think it was a decent set for the IT majors. For Wipro in particular, I think the expectation in terms of IT services, I think their guidance still continues to languish the overall year estimates. And therefore, I think the expectation in terms of numbers picking up and showing some amount of stability quarter on quarter, I think that's the missing piece for Wipro.
Right.
In case you have heard about AI announcements for Infosys, there is a guidance change. But I think markets are looking up to Q3, Q4 in terms of client discretionary spending, and therefore the impact in terms of order wins, pricing, and the margin impact.
Okay, so IT continues to be in focus. We've also got, let's pull up the silver ETF, clearly continuing to move and at a frantic pace as we've seen pretty much all week. It's a consistent trend. Now we'll pull that up one for you. Nippon Silver is up close to 3%. And Asian Paints, let's pull that one up as well. On opening itself, we saw a spike in that counter and it's continuing. So looking quite active this morning. Shell, anything particularly you're tracking on Asian Paints this morning? It's up about 3.5%.
Nothing much on Asian Paints, Abha. I would imagine this is ahead of its earnings where things are not looking bright, but the entire FMCG basket is doing really well. In fact, of the 19 stocks that we track, FMCG index is the only one which is up. So I would keep a very strong eye on Tata Consumer, Nestle, Britannia, and in particular Radico Khaitan from the liquor stable. These stocks are looking really, really strong on the charts. And of course, Reliance going great guns despite the Nifty down 37 points. Reliance, which has an 8% weightage on the index, is contributing 11 points in the positive. That's something that's essential. Maybe Mayuresh can offer a view on Reliance. From 200-day DMA, it's now showing signs of strength.
Mayuresh, ahead of RIL's earnings?
No, so again, I think the retail run businesses should continue doing well. I think you've already seen some element of respite in Q2 with GST rationalization. The retail part of the business, when it comes to Reliance Retail, should start picking up steam. Geo should have a stable set of numbers. As far as the upstream business is concerned, the expectations in terms of the deltas that they probably derive and the premium to Singapore GRMs as far as the refining part is concerned, I think that should come back very, very strongly as we head into the next calendar year. The petchem business stable as we speak, and therefore the new energy businesses in a calibrated way should also aid ROEs. So it may be constructive from a long-term view on this.
Okay, what about Eternal? I just want to bring that one up as well, Mayuresh. What did you make of earnings? Do you feel, we did see while profit narrowed, expenses were also extremely high. So do you see this as a sign of competition heating up? I know that the market has been very bullish on Zomato, now called Eternal. So is it just profit booking that we're seeing today? What's your outlook here?
So valuation still remains sky high, Abha. So I think competition is one aspect to this entire business as well, and they've expanded their dark stores quite meaningfully in terms of their targeted expansions over the last few quarters. However, I think the NOV jump was something that you would expect in Q3. It would be even higher with festivities coming around. But I think the margin contraction that you've probably seen on the food delivery business, I think that is something to monitor. For quick commerce, again, competition is intense. You might see NOV pump up. That probably happens quite significantly. But again, how does profitability probably grow in terms of the valuation stack up? Very, very expensive. So I think money is being taken off the table as we speak. Fresh investments will need to wait. Obviously, will it do well in terms of how the business prospects are? Volume-wise, yes. From a price perspective, I think much of it is priced in as far as numbers are concerned.
All right. Now, the Indian IT sector has downplayed any major fallout from the draconian H-1B visa regime announced by the US. The five majors announced their earnings these past few days: TCS, Infosys, Wipro, HCL Tech, and Tech Mahindra. They've all said that the $100,000 visa charge will have limited or negligible impact on margins, as most of their US staff are local hires. All five firms have been clear on the issue that years of workforce localization in the US have cushioned the blow, and they expect business continuity in their largest overseas market. Meanwhile, Infosys and Wipro have also raised their revenue guidance for this fiscal. Now, in other global news, Commerce Minister Piyush Goyal last night lashed out at the Indian industry during a CII conference, accusing it of showing weakness and ridiculous responses on trade issues. He said the sector can't demand open markets abroad while resisting competition at home. Listen in.
Your industry sometimes demonstrates so much weakness that even giving a minor quota of 1 or 2, 3% of our consumption in India, you'll make a big fuss and hue and cry about it. And I feel very disappointed when that happens. It shows you in very poor light. It shows weakness. When I try to understand how will 2 or 3% imports hurt 100% of your domestic market demand or pricing, I'm given very ridiculous responses. And ultimately, when we have to do FTAs, we will need support from all sectors. It cannot be that we want open markets everywhere, but our industry leave out when you open up the Indian market. That can't work.
All right, let's take a look at IT once again, because the pressure really is building up there. Let's pull up Wipro for you. And remember, IT this year has had a really, really terrible run, down about 4-5% now. We were looking at some pullback, as Shail was also mentioning, over the last couple of weeks. But this morning post earnings, Wipro particularly is really just seeing a harsh reaction from the markets. Shail?
Yeah, absolutely, Abha. But again, these are, knee-jerk reactions. I don't think so. It vitiates the investment thesis that people are getting into, in the sense that stocks have corrected sharply. They are run by phenomenal managements. These are debt-free companies where the income is in dollars. This is just a knee-jerk reaction. It will be absorbed by the market. Lots of people and lots of fund managers have poured in thousands of crore rupees into IT positions, and they should work. I don't think so one swallow makes a summer, so we'll just avoid getting a bit bearish on this kind of a negativity post earnings.
Okay. Few other earnings reactions. You got CIE Auto. Let's pull that up for you. We've got Suntech Realty also reacting to earnings. Let's pull up CIE and see where it is. We are seeing some amount of reaction. I think that chart is possibly frozen, but it is definitely seeing some amount of reaction coming in. Nifty Auto is steady this morning. The pressure is really on IT. Some amount of a negative reaction coming in on Z post earnings as well, and a whole host of other broader market stocks that we continue to see moving on earnings this morning. Let's pull up JSW Infra as well. I think we've got earnings reaction coming in there. Suntech Realty is another one. So a whole host of counters in the broader markets, of course, that we continue to track on earnings buzz. And keep your eye on Reliance, because that's the other big one. GeoFin is seeing a good reaction to earnings, just up about 0.5% or so, steady coming in there. And the big heavyweight RIL is the one that we're watching out for next, now that most of the IT stocks, or the big heavyweights at least, have reported earnings. Mayuresh, closing comments before we wind up today?
No, I think generally, I think the result season has been reasonable so far, Abhay, and therefore I think there is some expectation that a few pockets might still remain soft. But the positive indications are that Q3, Q4, the commentaries probably might just be looking up because of GST rationalization, the income tax cuts that you've probably seen, and therefore consumption should make a very strong comeback. Private capex is making a very, very strong comeback as well. Government capex expected to continue. Corporate debt to GDP remains low. And therefore, I think corporate earnings should start coming back very, very strongly as we head into the second half. We should get a base supporting factor for the market. So any kind of a dip that comes through, a significant one, will be even better. We'll probably start accumulating good quality leadership stocks in these markets.
All right, Mayuresh, thanks so much for joining us. Shell, thanks as well. That's where we leave it today. Do tune in for market closing at 3 o'clock. Thanks for watching.